us from progressing in the markets, and how many people, have understood the way things go, buying or selling, having these type of profits, but at the same time, still struggling with the emotional part. Is there anybody on here that still, struggle with it on a day-to-day basis? And it's understandable and it's normal. The thing is, in order to really get rid of it, there's a couple of key factors that we have to do, but most importantly, we have to remind ourselves to keep ourselves in check. It's all about discipline and having the principles and the foundations that's necessary. It's just like anything else in life. If we really sit down and organize things on a piece of paper to really stick to these certain, things, these tasks, you'll be able to accomplish whatever you want. So it has to be the same when it comes to this. And it might sound tedious, but I promise you guys it'll help create more profits with more comfort instead of stressing out all the time, right? The number one emotion I want to go over is the greed effect. And I could harp on this multiple times over and over and over and over again, but at the same time, it just hits us, especially once you start building your account and you start, taking higher lot sizes. Once you start taking higher lot sizes, you're making more profits faster than you would have with a lower lot size. What it does, it triggers it again. It triggers that mentality that you want more. If you're up, before you used to be up 300, but if you start using, a standard, you're up 300 pips, and you're up $3,000, you want more. You want more profits, and because of that, that greed effect starts to kick in, and you don't take your profits. And what usually happens, when you don't take those profits, either price will come down and retrace, and you have little to no profit, or even worse, you'll hit your stop loss, or even worse, if you didn't set a stop loss, you blow your account. There should be no reason why people that's coming onto these sessions should be blowing their account, as long as you're doing proper risk management. And no matter what I say, there's going to be those that group of people that's going to sit there and want to make it quick, come up real quick to make that huge amount of profits. But at the same time, all it takes is one trade to wipe out the track record. Like if you had a good track record and you're winning trade after trade, and after every trade, what happens is you take that one trade where you decide to be greedy with it, and then it removes everything that you've worked for, the couple days or the couple weeks that you worked for, and it could be gone within a couple seconds, even a couple minutes, if we start to get greedy. So in order to get rid of that, you have to find ways to keep yourself in check. And the best way I was able to learn was the twin trading and having your daily PIP goals. So if you have your daily PIP goals, no matter what, even if you're doing this, you have to think of it as in a year's time of how much money you have in your account, as long as you're doing your daily PIP goals and you're twin trading. When you twin trade, it's simple. I'm going to break it down on the technical side of things so I could actually, draw it up for you so you can see it visually, because I don't want you guys going just by what I say. I want you guys going by what you see as well, right? So in order to get rid of the greed effect, we twin trade. We take two trades, right, that is the equivalent of a lot size that is equal to 2 to 4% of your account. And the reason being is because we only want to risk 2 to 4% of your account. Now, what it does in the beginning, right, you take two trades in the same area, you're able to profit whatever your daily PIP goal is, whether it's 30 to 50 pips, no ifs, ands, or but. What you do is as soon as it hits that 30 to 50 pips, you close out one order, and you change the stop loss in the other order to 5 pips either above if it's a buy or below if it's a sell of that entry price. Now what that does, right? What that does, if the price reverses, you already collected your 30 to 50 pips, but you also collect 5 pips. You're not risking anything in your account, so now you're trading risk-free. Imagine once you get to that point where you're taking high lot sizes and your trades have a 5 pip stop profit. You're not risking any money in your account. Think what that does for you psychologically. For the people that has been on here doing twin trading, I'm going to break that down. I'm going to break down the twin trading on the technicals when I draw everything up for you guys. I'm just going to be speaking and talking about the emotions and the self-awareness of these emotions and how to get rid of it. Okay? So, with the greed effect, when you take those trades, what happens is you get rid of that mindset. You get rid of that greediness, that one thing that's telling you that to keep going along with the trade. And then what's the worst that happens after that? You either win 5 pips and then you wake up, or you wake up and you're up 100 something plus pips if you call the trade right. But no matter what, as long as you're doing your daily PIP goals, you know what to expect. And at the same time, you're also transitioning your trades professionally to the point where you could write out the long-term trade. Okay? So that's the greed effect. Now with euphoria is a little different. What happens, this happens to a lot of new traders. For some reason, more often than not, you have these people that come into the Forex markets. They start practicing with them, or they even go on a live account, but they start taking trade after trade after trade. And if you really think about it, it's a 50% win ratio, because it's either going up or it's either going down. What happens to a lot of people is they'll start to take these trades back to back to back to back, and they're winning and they're winning and they're winning. So what happens is you have this euphoric mindset where you feel that you're untouchable. You feel that you become reckless. And what happens is a couple of things. You either increase your lot size, you either trade with no stop loss, or even do a bigger stop loss because you just want to be able to, catch the trade. But you start to trade recklessly. When you trade recklessly, that's another way to blow your account, because you're, I'll explain a PIP and how to count it. But at the same time, I want everyone in here too as well to please do the homework of actually going through IMO Academy, going through the back office and actually, going through the videos, because I promise you that even after watching the beginner session of IMO Academy, you will know exactly what a PIP is. You will know exactly what leverage is. You will know exactly the different types of orders. You know all the major currency pairs. You'll know the history of Forex. You'll pretty much know everything, even support and resistance. Okay? So for all the people that have questions when it comes to those things, we have to utilize what we have. There's a reason why we created this educational, service, is to help the news person, come on and utilize everything. Yes, I understand this is the beginner session of IML TV, but we still have to do the prerequisites when it comes to this stuff. That way it works out at a faster pace and we're not going back and forth, because, even just breaking it down, PIP, leverage, margin, a bid, as price, all type of stuff, it will take away from, this, the psychological aspect, and even how to draw everything up, and even how to place these trades, when in all reality, we could just got it done from the get-go, less than 40 minutes long. It's even a PowerPoint, and I even read you the PowerPoint, so I pretty much guide you throughout the entire time. Does that make sense? So please, everyone, utilize the IMO Academy. Going back to euphoria, like I said, is reckless trading. So in order to get rid of that reckless trading, when you trade, wherever your trading station is, whether it's a desk, whether it's a table, whatever it may be, have your notebook or even something posted on your wall, with the confirmations, and also proper risk management. 2 to 4% of your account. Also, your daily PIP goals. What that does, that reminds you, because it's just like anything else in life. Out of sight, out of mind. So we have to make sure that it's always in sight, so it's always in our mind. So that way we are always, checking ourselves. We're always making sure that we're good to go, that we're sticking to our principles and our foundations. If not, we're pretty much going to be everywhere with this whole thing, and it's just going to be pretty chaotic. I want to keep everything organized, so that way it's a lot easier and a lot less stressful when you trade. That's the whole main point. Make it, very strategic, right? To be strategic about every single move. That's the main point. So in order to get rid of euphoria, have something there to remind you every day to stick to your daily PIP goals. Have something there as a reminder to stick to, your risk management. Remind yourself, if you're about to take a trade and you want to do a high lot size, even though you're super confident, think about what happens if it goes in the opposite direction. And you take that standard lot on that $200-300 account, all it takes is 20 to 30 pips in order for you to lose all that. And how would you feel? You won't feel good at all. The next thing you know, you go into the part where it's fear of the markets, and I'll explain that later, right? So in order to get rid of euphoria, have something to remind you every single day, no matter what. Be very strategic with this. Hold on, I'm reading the chat right now. Interested in risk management. I'll break that down as well too. On the lot sizes, that's also an IMO Academy as well. It breaks down the lot sizes and what to use, so that way you understand, how much money you're making per pip, but I'll break down the risk management side of things. Okay. Revenge trading. Let's continue along with this. Let's continue along with this. All right. So, revenge trading. What that pretty much is when you lose money in the markets. You lose money or you blow your account. There's a couple things that end up happening. You either go back into the market if you didn't blow your account, and you tell yourself, "Hey, I just want to make my money back plus some." And what you do is you do a higher lot size. Throwing all of it out the window, all the mental side out the window because you just want to gain your account back. That's revenge trading. What that does is you trade recklessly, you trade off emotion, which is you're going to take trades even if there's not even 2 or 3 confirmations, just because you're forcing it to happen. And that's not how this works. We don't force things to happen. We wait for things to react in price so that way we can respond to this entire thing. Okay, revenge trading is very bad, because some people will blow an account, go back into their brokerage account, deposit another 200, they'll blow their account, and then deposit another 200, and they'll blow their account and deposit another 200. When in all reality, if you lose 200, you really just lost $1,000 because you deposited money into your account multiple times. That's not how this works. You lose the trade, you lose like a professional, and even if you're 50-50, 5 out of 10 trades, and you lost 5 trades, but they're each 20 pips, you lost 100 pips. But what about the other 5 trades? What if they're 100, 200, pips? What happens now is you have anywhere from, 200 times 5, that's 1,000. Then you get 300, the next thing you know, that's what? 5 times 3, 1,500 pips compared to the 100 pip losses. No matter what, that's the whole point, is to have a positive return on investment, a weekly, a daily positive return on investment, and that's all that matters, because you have to realize that it's going to compound really, really quick the moment you start building that account up. All right, so in order to get rid of revenge trading, okay, so here's the thing for stop losses. It's up to you. A stop loss is depending on how much you want to risk in your account. If you want to risk 20 to 30 pips, then that's you. If you want to risk 10 pips, that's you. The go-tos usually are 20 to 30 pips, but at the same time, it's depending on how comfortable that you feel about your trade. This is your Forex brokerage account. This is the money that you're playing with, right, and that you're actually building. So it's depending on how comfortable you feel for pressing buy or sell. Okay? In all honesty, the reason why we have IMO Academy is because we cover everything, usually everything that Baby Pips has to offer. We wanted to create this as a one-stop shop. But for the average pip stop loss, like I said, it's depending on you. Average, usually people do 20 to 30 pips. Some people do bigger, stop losses, right? Because they're swing trading or taking position tradings, which just means longer term trades. It's all depending on you, okay? You have your thing. If you're comfortable, you're like, all right, 20 to 30 pips no matter what. But if you're uncomfortable, you take a lower lot size and you have a bigger stop, that's up to you as well. Going back to revenge trading and the psychological aspects, revenge trading, what you do is you lose like a professional. You highlight the area that you lost. When you look at it later, you find out the reasons of why it went into that direction in the first place. And because of that, it allows you to learn from your mistakes. That's the main point. Just like anything else in life, we have to learn from our mistakes. All right? Fear the markets, the exact opposite of euphoria. When you have euphoria, you're taking trade back to back to back to back to back. Okay? Taking trade back to back. And you're winning every trade and you trade recklessly. Now with fear the markets, you're losing trades back to back to back to back. Or even if you even lost your first trade, what happens is you're emotionally connected to your last trade. So because of that, what happens is you're scared to trade in the markets, if that makes sense. Okay? You're scared to trade in the markets because you're emotionally connected to your last loss. And that's not how we want to be, because if we do that, then how do you think they'll ever be able to progress? What happens is anybody ever was at that point where they're about to take a trade, right? They're about to take a trade, but they don't take the trade because they're emotionally connected to the last trade. Has that ever happened to anybody? Exactly. There have been times where I was looking at trade setups and I would see it perfectly, confirming with everything, but there's something that was holding me back from pressing buy or sell. And in all reality, the one person that was holding me back was myself, right? Because we're so scared. We're so scared to lose money. But I bet you for a fact that if you're using proper risk management, do you feel that you would have been scared to enter that trade? Do you feel that you would have been scared to press buy or sell? Especially utilizing all the confirmations. If you're risking only 2 to 4% of your account, you would not be scared to trade in the markets. I promise you that. The only time that it would really scare you is if you're using a high lot size and you're trying to make your money back. You know what I'm saying? Like, that's the whole, emotional aspect, is if you're really trying to get your money back and really mess everything up, because that's not how this works, right? So in order to get rid of, the emotions of your last trade, is very simple. Just trade proper risk management, go through your confirmations and enter. If you still don't feel comfortable doing that, and then there's nothing wrong at all. There's nothing wrong at all to trade on a demo account. To trade on any demo account. To be able to take a $200, demo account and flip it. That's the whole main point, right? If you feel that you want more of a realistic demo account, well, for every broker, majority of the brokers that you use, you can still open up a demo account. And you can load however much money you want into that demo account. And you just get the email for the login and the password for that demo account, type that into your MetaTrader 4, and now you have an account rather than, $3,000, $5,000, or $100,000 on demo. You're actually having anywhere from 2 to 300, whatever you put there, to make it more realistic, just for the psychological aspect. So if you're having fear of the markets and you don't want to risk any more money right now, then why don't you just practice? Because there's no point of not practicing. Just because you don't have money in your account doesn't mean to not trade. I mean, you have to practice and practice and practice and practice. Repetition is what? Reputation, right? For the confirmations, it's simple. Check, 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 and check. That's it, okay? So last but not least, in the psychological aspect, is paralysis from analysis. Now, the way we see that is this. You look at your charts, no matter what, you're studying, but no matter what, you're confused on what's happening. You see how price is, right? You see how price is moving, but no matter what, you're confused because you're studying so many different types of trading styles, to the point where you have paralysis from analysis, which means that you pretty much just fried your brain, and all other trade setups, contradict another trade setup because you learn a different way. So in all reality, it kind of hurts you because you either don't take the trade or you take the trade wrong, you lose money. You know what I'm saying? So in order to get rid of paralysis from analysis, you have to create balance. You know what I'm saying? Like, if you stay on the charts 24/7, it's not going to work because you're just going to be mentally exhausted, and you're not going to be really looking for the setups as clear as you should be. So have balance. If you're going to study, yes, you can study for a long time, but you can study for 2 hours at a time, take a break, go to the gym, do whatever you need to do, read a book, live your lifestyle, and then come back and do another 2 hours and do it in spurts. So that way it just doesn't fry your brain too much, because trust me on this, there have been times where I've studied the markets and stayed on the charts constantly, to the point where my eyes were hurting, my head was hurting, and in all reality, I was just more emotional than I was confident, because I was just, spending so much time into the charts, and I was tired and I was exhausted, mentally. Okay, and that's how to get rid of paralysis from analysis, is just to create that balance and to do it in spurts, pretty much. Okay, so let me type this up real quick. Alright, so right here is I have a list pretty much of the confirmations that I want in order for me to enter a trade setup. Okay, so you see the list. I'm going to go, step by step on every single one, so a lot of people understand. Because when you first come on here, everything looks like just crazy charts going up and down, and we really don't know what's going on. Okay, first thing I want to break down is support and resistance. As you can see, right? Let me delete that. Actually, you go over here. You're able to look at the different lines you could pick. I pick horizontal line. I place it, and I want you guys to see something. Even just dragging this around, look. At the top, you see how price is bouncing below, kind of like a ceiling. And what happens when price comes over here? There's a floor, becomes a ceiling. What I'm doing is I'm looking for areas where price is struggling multiple times. Look at this. Where price was struggling over here, look how price was able to respect it. That's the whole main point. Keep dragging it around and looking, and look closely to things. You start to see it. Look, resistance here, right? Also resistance here. Look right over here. There's like support here, right? A floor here and a ceiling here. I drag this all the way down again. Keeps doing the same thing. Look, price is testing multiple times, which means it's bouncing either above or below it. And it does the same thing here. And look, price tapped twice and then dropped. That's what support and resistance is. If price is above it, right, and that's resistance, that's known as a ceiling. And right here is still a ceiling, price testing. If price is above, then it's support. If price is above, bouncing here, and it's what? Support. If price is bouncing above it, it's support, aka a floor, or resistance, aka a ceiling. And that's the part about Forex you have to understand, is you have to adapt to it. And you have to constantly keep drawing everything up just to be ready for the trades and to watch how price reacts within those areas. Okay? So, watch for a second. That's how you adapt to it. You can start to see where price bounces off. Look, resistance and support. Okay? And you look closely. Even right here, there was support. What did price do? It broke the floor, and it became the ceiling, and then it made another floor over here. So now I'm adapting to it. I'm looking closely, right? You see that price is bouncing, bounces off this, bouncing off here. Even though the price broke below, the fact that it came back up showed that this area was respected. Okay, that's why there's no perfect way. Like, does it have to tap perfectly? No, it's just the general vicinity. Okay, price bounced off like a floor, off of it, off of it, off of it. And what did it do? It broke. Once it broke through, you can look at this level of a floor here if you want to utilize that. And watch how everything works. Floor, floor, price broke below. As soon as it broke underneath, boom, it started dropping even some more. Right? What's price do? You look to the left, you see a level of a floor where price is bouncing off of. What does price do? It breaks it, comes back up to test it, and then it drops. And it constantly keeps doing that. You can watch that everywhere, okay? Watch. You can take these lines and pretty much adapt to the whole situation. So if you look closely here, what is this? There's a level of a ceiling. Where price is bouncing above, and there's also a floor, which is right here. Okay, you see that price is bouncing up here. You can drag this up to see another level of a floor. You can look closely. Just drag it until you see where areas where price is touching multiple times. Yes, right here, it touched multiple times, right? What did it do? It broke the level of the ceiling. You just have to adapt to it. Here's a new ceiling. Here's a new floor. Boom. Here's a new floor. Here's a new ceiling. Price broke below, came all the way back, broke above the ceiling, and this became the floor. Where it reversed off is now the ceiling. And it continues to grow over and over again. Look, we created a ceiling here, right here. There's a level of support right here. Price is bouncing above it. What did price do? It broke above the ceiling, and it came and tested as the floor. What did it do? There's a new ceiling up here. New floor. All of a sudden, price breaks above, comes down to test the ceiling as a new floor, and continues to take off. And where's the new ceiling now? Right here. What did price do? It broke the ceiling and now became the floor. Right? What became the ceiling? Oh, this higher area. Awesome. What did it do? Broke the ceiling and then again became the floor. And it constantly keeps doing that time and time again. Right? Is everybody following me so far? Alright guys, give me a second real quick. I need to grab the charger for the phone so that way I can utilize it for the chat. Now the thing about this is this could be used in every single currency pair, and I'm going to show you guys. Pick a random one. I'm not going to use them. So for example, right, Euro GBP. Look closely. Boom, level of resistance, level of support, broke that level, tested support as resistance, okay? You continue to drag it, right? What I do, price broke over here. You start to see it happen over and over again. Let me start out from up here. Look, resistance. Price is coming, testing, drops, comes up here, makes this wick, red candle. This would have been in position for a sell if you wanted to take it. Still would have caught 92 pips. What it do, you adapt again. You grab this line, you're able to see that this is like the newfound level of a floor. Price did this, tested, came up. You just have to adapt to it. If it's non-trending as a sideways movement, then yes, it's gonna be a lot harder. Always pick a chart where it's trending. Okay. For example, right here is trending perfectly. There's a level of resistance and there's a level of support here. Price broke above resistance, tested as support. Right. Next you know, price broke above. There's a new level of resistance literally right here. And this is the new level of support where it reversed. Price broke above resistance and became support. Where's the new ceiling? Ceiling's right here. Broke the ceiling, became the floor. Okay, where's the new ceiling? Up here. Yes, price broke above multiple times, broke underneath, but came back up. And look, resistance. You're gonna see it time again. It comes up. Actually, resistance is up here now. This is support. Price breaks above. This is the new level of resistance. Breaks below. You watch. You see how it's just playing off of this level. Gaps above, breaks above resistance, tests as support. That's the thing. It's very adaptive. You have to be very adaptive to this, and you have to watch how everything works. The concept was pretty simple. It's happening when price was dropping right here. It's happening when price was rising up here. Look at this. Resistance like a ceiling, support like a floor. Price came and tested this multiple times. Ceiling, dropped heavily, came back up, tested again. Where's the level of support? Right here. Price is bouncing off of it. Price breaks below. Test. Level of support. Right there. You're watching it. Broke that at level. Came back up to test as the ceiling. You look to the left and you draw these lines up. You see how it respects here, here, and even over here as resistance. It broke below, tested it, and then dropped. It's happening over and over again. It becomes repetitive. You just adapt to it. You keep drawing everything up, watching how price responds to everything, okay? Over again, resistance, boom, same thing. Look at it. Look at it right there. It's testing over and over again. Patience is key. The reason why people fail at this is because they're not patient. They'll watch it like this takes too much time. Well, it doesn't take too much time to make money every single day if you wanted to. Having charts already all drawn up and ready and good to go. Trust me, guys, in the beginning it seems tedious, but once you start seeing the profits run wild, is when everything starts to make sense. Now what I do for support resistance is I utilize these levels to create supply and demand zones. What that means is I draw these boxes around these areas of where support and resistance lines are, and I draw it for a visual effect for me to enter the trade. For instance, there's support here. What I look for is I look for wicks along that area. It doesn't matter which one is touching it or breaking through it. I can use any one of these and they'll still be accurate, right? So I'll draw from the wick to the body of the candle, all the way across, okay? Now you see how simple it was for me to enter that trade setup, all right? I draw a level of support right here, which is also resistance. I could take any of these wicks, this one, this one, this one, even this one. Say for instance, I take this one, this smaller wick, body of the candle, and then all the way across. And look, is it a coincidence that price came into that area and tested off it? No, it's not. It just happens time and time again. Look at this area of support, also support and resistance. I draw a box, the wick to the body of the candle, all the way across. Alright? Same thing over here. I have a level of support, look for wicks within that area. I see some, one right there, one right there. Boom. You start utilizing it. You start to see that prices are reversing along these areas. Look, level of support, right? Support. Wick, or the wick here. Say I pick this wick to the body of this candle all the way across. Are you guys seeing how it comes into these boxes? Breaks comes into the boxes, breaks comes into the boxes, breaks and comes into the boxes, right? Breaks comes into the box. Does everyone see why this is such a visual tool for you to be ready to enter your trades? you see a break, what I do to get the support and resistance lines accurate, or look for an area that it breaks, is when you're moving around the cursor, you're going to see a horizontal and vertical lines around the cursor. Utilize that to see levels. Like if even when I'm over here, you can see a horizontal line going all the way to my left. When I saw that price broke all over here, I look to my left to see if there's an area that it broke. Yes, right here. And I look closely just to see if there's a strong area where price reversed multiple times. I see it is. There's resistance here, there's support here, there's resistance, there's resistance, there's resistance. I could even just take this from over here, from this wick to this wick, shoot into the future. What do you mean, where do I anticipate? I don't anticipate, I actually confirm it. That's the main point. I don't anticipate where it breaks. I watch it for breaks. Look, it broke here and then came all the way back up. I didn't anticipate that. I confirmed it, right? Price broke this area right here, which was support before. Came back up, tested it. Look, it broke this area over here, the support level. Came up and tested it. It means I didn't anticipate it. I just confirmed it. It broke this level right here. Came back up to test it. What I'm doing is I'm looking at what actually happened within the market. Okay? And I'm utilizing the data coming from the market as my confirmations for these trade setups. Price is bouncing off of it like it's, support, but then it breaks it, comes back, tests, and then drops. Breaks the level, comes back, and then drops. That makes sense, everybody? Does everybody follow me so far? Just making sure. Now, what do we have over here as our confirmations? What did I put in? We already went over support and resistance, right? Went over support and resistance, went over the zone. What I utilize as another technical is a trend line. I look at areas where price has touched multiple times. If you look closely here, you see how price touched it once, twice, and then a third time? 1, 2, 3. What it's doing is it's testing a level of a slanted level of a ceiling or a slanted level of a floor. Now price is bouncing once, twice, 3 times. There's also resistance here. There's also a zone here. Okay? All I do is I pick areas. I'm watching where it tests. Look at this. I can see it tests here, here, and even here. How do you know where to put a buy or sell? Based on, okay, well, number one, what do we look for? Resistance or support. We look for a ceiling or a floor. Boom, there's a ceiling here. Okay, because look, there's also a level of a floor, which is the fourth confirmation, pullback. Okay, so price breaks below the support here, it tests as resistance. There's a zone because we draw wicks around the support resistance line to give you that visual reference. There's a trend line which is touching once, twice, a third time, so that means it's a strong area that is not breaking through. Okay, and resistance, the ceiling was once a floor, which is called a pullback, which means that it's coming down and testing to confirm that it's going to drop. That just means you take your finger and you go onto your phone and you press sell. If you're expecting it to drop, you press sell. Does that make sense for the anticipation aspect? Because you press sell there, all of a sudden, price drops hundreds and hundreds of pips, 346 pips. Okay, look what happened over here. Look, price tested 1, 2, 3 times, trend line, okay, was now resistance, which is a ceiling, which was once a floor, that's your pullback. There's also a zone here, so resistance, check, trend line, check, zone, check, and was the ceiling ever the floor? Check 4 times. The fourth confirmation. It hit and then it dropped. Quick, heavy, 95 pips. Alright? Same thing over here. Look, price tested once, twice, even a third time. This is a level of what? Previous support. There's a zone here. There's resistance. 4 confirmations. And what did this do? Price dropped. 174 pips. What did it do again? Oh, look, touch the trend line. Touch. Oh, touch. Hit resistance. There's a zone, and this is once support. Okay? Is that pretty clear so far? Those are the 4 confirmations. How does this work in real time? This was real time. What we're doing is you realize I'm just showing you guys the technicals of the past and how we could actually, because I have to show you guys the past. I have to show you guys history because history repeats itself. How could we look into the new markets if we don't know what to expect? Can someone answer that question? How can we know what to do with the new markets if we don't know what to expect and what to look for in the first place? It's impossible. That's pretty much guessing. Okay? That's pretty much gambling. That's pretty much tossing up a coin. Alright? And from everyone that has been on this session for the past couple weeks, we've been having more than 1,000 pip weeks. We've been having 1,500 pip days. Even averaging 500 pip days. We draw everything up on the 1 hour. You enter on the 30 minutes so that we can enter. So for example, even when we're looking at trade setups before, even if you're looking at trade setups before, look, even right here, before, look, support, broke support, tested as resistance. Look, level support here, broke, tested as resistance. Okay, and now price is here. What will we do to confirm this area? Well, guess what? In order for us to enter this trade, you have a level of resistance here. You have a level of what? Support. Now, if price breaks support and tests as resistance, exactly like we saw in the past, then we sell it. If price breaks above the ceiling and tests as the floor, just like what happened in the past, you buy it. Okay? Now, that, we would have never known that if it wasn't for knowing exactly what to look for in the first place. Okay, look, there's a level of support here. What did price do? It broke below and tested, and there's also a trend line of where it tested multiple times, as you can see. So by looking into the past, we're able to see touch, a touch, a touch, support right here. If you want me to really draw a zone, I could draw a zone right there, all right, which I will. Look, there's a zone. Look, touch, touch, touch. Broke resistance. Resistance ever support? Yes, it was. Was there a zone? Awesome. How many pips would we have caught from this trade? Okay, we would have caught potential of 90 pips. Does that make sense? Confirmations. Now do we see why we go back into the past to look at trending markets to show exactly how price is? The only problem that we have is if we don't see the confirmations, right? If you don't see the confirmations, people still enter. People still enter. They're like, oh, well, I don't know. I might drop. There's no trend line here, but I'm just going to take it anyways. And then it goes in the opposite direction because you didn't wait. Like, well, there's no support and resistance here, but at the same time, like, it looks like it's dropping. I'm just going to enter. Oh, there you go. You lost another money. Well, there's no zone here, really. Like, I don't really see a zone. It's not really respecting in the zone. I'm just going to take it because it's probably going to drop. Even though I don't have a trend line, I'm still going to take it. And then, boom, you take it and you lose money. Right? If you don't have the 4 confirmations, then what's the point of even trading in the first place? There's no point. You're gambling. This is not gambling. This is professional trading. This is having a positive monthly return on investment. This is having a positive yearly return on investment. And that's what we wait for. And the thing is, it's not hard work. So like we always say all the time, the things that are easy to do are also the things that are easy not to do, right? So when you sit here and you draw this line up, and you draw a horizontal line, and you draw one box, one slanted line, one box, and one horizontal line. That was not not hard work. But the fact of this happening and this coming up and all this stuff, this happening right here, would have made you feel like, I don't know, like, it's probably not good. Instead of being patient, you should have been patient. If you were patient, look at how many pips it would have caught you if you're just patient. How many people got caught in a buy here? How many people got caught in a sell here? How many people got caught in a buy here? And how many people just lost all their money when price started dropping down? Eco Green. I have shown a buy trend before, remember? This is the exact opposite of what this looks like, except resistance becomes support. You've seen it. Same concept, except it's going up. Right? Guys, we have to please, like, visual picture, whatever if you see it, you see it. But it's simple. I'm going to break it down. It breaks the floor, becomes the ceiling. It breaks the floor, becomes the ceiling. It breaks the floor, and it becomes the ceiling. What did it do over here? Oh, it broke the floor, it became the ceiling. It broke the floor again, became the ceiling. Does that make sense? Resistance, another word for it, is the ceiling. Support, the other word for it, is a floor. How long would I be in this trade? Like this. Okay, so watch. The last thing I'm showing you guys in the technical side, because we pretty much broke everything down. Okay, let's say this is going to be blue, because we got like profits. Okay, so let's say that this blue line is your entry. This red line is your stop loss. Okay? I want to type this up for you because people want to see this. It's smaller. this is pretty much self-explanatory right here. Okay. For twin trading, say for instance I have $1,000 in the account. What I'm going to do is I'm going to do a 0.05 plus a 0.05, which is the equivalent 0.10, which means 20 pip stop. I lose, if I lost it, $20, which is equal to 2% of my account. So let's do this real quick. Say this blue line right here. You're like, this is too easy. This is way too easy. There's a zone here. There's resistance here. There's a trend line here. And resistance, the ceiling was once the floor. It was too easy. So you entered. You put say you had $1,000 account, you did a 0.05 plus a 0.05. That means your lot size was 0.05, and you press buy twice. I mean, you press sell twice. Sell. What this blue line is. Okay? The moment that one trade goes 30 to 50 pips in profit, you close out one of these 0.05s. On the other order, you change your stop loss to 5 pips if it's a sell below the entry price. So a price reversed, whatever is in between the entry and the stop profit is how much pips you would have collected no matter what, even if you're sleeping. Okay? Now what happens when price came here, right, and reversed? I would have took that stop loss and put it above that. Price reversed. I would put my stop loss and put it above that. Price reversed. Put my stop loss and put it above that. Came up, reversed. Put my stop profit, right, above that. Okay? Price came up, reversed again. Put my stop profit above that. Price came up, reversed again. So my stop profit goes above that. Price came up, reversed. My stop profit is now over here. Price came up, reversed. My stop profit is now above this. Price came up, reversed a little bit. Stop profit is above that. And then what happened? Price went into the opposite direction, right? But guess what you did? Do you feel that from this point all the way to this point, which was 281 pips, do you guys feel that this whole movement that you caught was at least 90% of the entire movement? No, not take profits, not take profits. It's your stop loss. But when you put it underneath your entry, if it's a sell, it's a stop profit. Now, is this more powerful than take profits, or is take profits more powerful than this? Exactly, because I want you guys to catch the entire movement. Take profit. Take profits, don't even put anything in take profits. Stop profit means your stop loss turned into a stop profit, because now if it's a sell, your stop loss, instead of being above the entry price, is now below the entry price, which is protecting the profit in between wherever your stop profit is and your entry price. The reason why I call it stop profit because it's profit, but no matter what, it's just a stop loss. All you're doing is changing the numbers in your stop loss. So if you're entering here, you want 5 pips in profit, add 5 pips to this, whatever that number is on the right, whatever the number is, you put that into your stop loss. And you'll see a dashed line on your MetaTrader 4 and it says SL there. Makes sense? Everybody clear on this? Awesome, 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 awesome. So, with that being said, we went over support and resistance, we went over trend lines, we went over zones, pullbacks, etc. Yes, exactly correct. Stop profit is just modifying the stop loss at specific intervals based on what's happening in the market. That is the best definition I've seen so far. That's good. Exactly what Son just said, right? So we broke down the technicals. We broke down what to be using as lot sizes per $100 in your account. You know how to twin trade. You know the psychological aspects from everything from the greed effect all the way to paralysis analysis. So with that being said, did everybody have a good beginner session? I only draw in the 1 hour. Awesome. Well, I appreciate you guys. I'm glad that everybody's learning. No, tomorrow. So this is the schedule. Sunday and Thursdays. Sundays and Thursdays is always going to be 8. It's going to be 8 p.m. It's going to be 8 p.m. Eastern. And then Tuesdays, Wednesdays, and Thursdays is 2 a.m. Eastern. All right? So I appreciate you guys. I will see you guys tomorrow on the London session. We're going to go over some trade setups together. And with that being said, I appreciate you guys. You guys have a wonderful night. And I'll see you guys tomorrow.